हेलो हेलो माइक टेस्टिंग चेक 1 2 3। तो अभी हम डिस्कस करेंगे जो हम यहाँ पे मैं चार्ट के अंदर आप लोगों को बता रहा था। ऑलराइट, let's switch default language to English so that many of people who are watching this video could understand this. Alright, I have intentionally used the music tracks with this video so that the people who are just like show me how this trading works and what's your method and methodology and techniques, those kind of people will like he's not even talking, so we should skip this video. So I don't want to engage those kinds of people in this video. But the people who are still watching this video, I will be explaining everything for you guys. Alright, so on the weekly time frame you can see price ran to the upside. Alright, with energy it just went up. Alright, this chart is without wicks, so I have hide the wicks. Alright, it's without the wicks, it's just bodies tell us narrative and the true bias. Alright, wicks are just damage. So you can see I have marked this as the real market structure shift pattern. So what is market structure shift? It's not like low has been broken and then we enter on the fair value gap. That's not a market structure shift. A real market structure shift is inside range of price, alright, in a required fixed time. Alright, so you can see this right here is the time period where price was railing from 2009. It was just railing without any reason. So from this low to this high it was up 300%. Alright, and at last at the smart man reversal time you can see it was like parabolic movement. Alright, within right here it was 17 March April, so in 1 month it went up 50%. Similarly in this December you can see price is about 57% up. So right here price is just breaking down. That is what I want to see. Alright, it could eventually come to this area, this region, and this region, I think. Alright, anyways, let's discuss this first. So what is the market structure shift pattern? Market structure shift pattern is first you have to know the bias and where the market is itself. Alright, so we are in extreme premium. Alright, so a real market structure shift is you should see, you want to see the buy side delivery with imbalances, all right, and sell side delivery with imbalances, disrespecting those buy side deliveries. So it became a what, a balanced price range. So this is a balanced price range where price is traded, and the next time price returns to it, the algorithm knows that this range is balanced, so it refers to the downside, right? But we can see right here is a low which entered this previous buy side delivery, right? Buy side imbalance, that is known as an intermediate term low. This could be a second confluence for you guys. You can see buy side delivery, intermediate term low, the turtle soup, it just falls run to the upside for grabbing more liquidity, and then sell side delivery. So in just few words, you can see, you can say a real market strategy pattern is just buy side delivery, intermediate term low, and then sell side delivery. All right. So let's say in layman's terms, you are new guys in this ICT world. All right. So what this is from this low to this high, we can just eyeball the equilibrium price point, which is right here. All right. But let me draw this for the sake of you guys. All right, from this high to this low, this is the premium, this is the discount. So once we were in a premium and we spot the market strategy pattern, ultimately our goal is down here, discount. All right, discount. So price is in a discount right now, it's consolidating. All right, so where it's consolidating near the 50% of this price leg, that is known as equilibrium. All right, we can see that right here. So this blue imbalance is a weekly imbalance. You can see I have plotted the quadrant levels. All right, so another thing I can spot right here is this low, this low, and this low. These are kind of relative equal lows. All right, price rallied, this is a stop hunt, it rallied to the upside, but look at the price where it is stopping dead. All right, look at it, even the pips. All right, it's stopping dead at the consequent encroachment of this weekly imbalance. Right here is the smart money reversal. All right, a dump to the downside. So this whole price action is known as a market maker sell model. All right, so let's bring the wicks back. You can see wicks were up, wicks were doing the damage, but the bodies tell the true story. All right, so this is the overall thing. So you can see that we were in discount initially. From this range we were initially in the discounted part. Our target is right here. All right, if we take this as a market maker sell model, this is our target. But let's see what price behaved inside this price section, because this is crucial. If you want to take trades, this is the place where I will take trades. All right, so we were in a discount. What price wants to do is go to a premium. All right, this retracement. So this retracement actually does many things. If this retracement does, it goes to the premium first. All right, why it goes to a premium? Because the smart money wants to sell in a premium. That is why. Where is our chart? Right here, smart money can sell inside premium. All right, so we have engineered, you can see relative equal lows right here. So we have a sell side liquidity. So if we have a large sell side liquidity pool, what we want to do is go to a premium to enter ourselves short, so that we can pair our exit longs with the sell side liquidity pool. All right, so price goes up, retraced, you can see the discount errors respecting price. So the institutional order flow is bullish right here, goes up, you can see it's kind of shallow retracement. The new beginner guys will see this part. All right, this part, you can see this high, this low, higher high, lower low. So they say this is a market structure shift. It is a market structure shift, but we have to see the narrative first. All right, market went down where? To this imbalance. So this balance acted as support on price. Market rally to the upside. Alright, we are going up for going down. Alright, so price wants to collect as many buy side liquidity. So high was broken, high was broken, high was broken. So we are extremely in a premium right now. So if I draw premium discounts from this high to this low, right here is a 50%, right here is the extreme premium. Let's do that now. High to low. This low. Alright, so this upper quadrant, if we divide this quadrant into two parts, but we are a little bit short from that. So the thing I was explaining to you is like we are in an extreme premium right here. So new guys who see this rally, this green candles, let's say you don't have this price action printed. Alright, so this rally is very bullish for guys who don't have narrative, who are just chasing price. Alright, but you can see right here is a liquidity pool, buy sell liquidity pool. You should and you must anticipate selling right here, because we are in overall bearish kind of scenario. You can see this big movement right here, and this retracement up is just the buy side of the market maker sell model. Alright, market went up, dumped, this retracement, and then so this whole thing is a market maker sell model. So from this low to this high, this is known as the smart money reversal. Alright, so discounted areas are respected, and then right here premium areas are being respected. Well, this is a one of kind market maker sell model in which 2 days just completed the market maker sell model, but it was a great opportunity. So we now know how bearish price action works. Let's now go to current price action. Can we spot this kind of market structure shift in any market maker sell models? Alright, let's go there. So this is daily time frame. Let's go to the monthly time frame first. So this is the monthly time frame, and one thing I would like to tell you is like we went down right in many years, from 2011 to 2020. Price went down to these 3 consecutive down close candles, and this right here is the main threshold of this monthly order block. Alright, just tell me, like is there any chance the support and resistance and supply and demand have any effect on this? Why is price action stopped dead on the main threshold of these 3 candles? You can see right here, right here, right here, right here, and you can see wick went down to collect the sell side liquidity in it. You can see the reaction after absorbing the sell side liquidity. Boom. Alright, and then further. So this one just month was about 50%. Same like here, these 3 candles were 50%. Right here, this is 50%. So we should expect some sort of retracement. Let's go to the weekly time frame. Alright, I'm eating a cake, so I want to eat and then we will talk. Alright, so we can see just green candle. So ultimately we want to see a retracement of some kind. Let's go to daily time frame. Honestly, on the daily time frames, price is really bullish. Right, you can see right here. Alright, this is the sell side of delivery, buy side delivery. So this imbalance, once this imbalance was violated to the upside, price came back to it. I can spot a fair value gap as well. So this inverse fair value gap, this is the fair value gap. You can see price dig into the inverse fair value gap, but it stopped dead on the upper levels of this fair value gap. Alright, so from this point to the up, we can see the discount area is getting respected. This fair value gap was created, but price didn't even try to touch this, let alone closing inside this. So this is really bullish. Alright, so you can see this fair value gap was also left alone. This fair value gap was, you can see we just wicked and then up. Same with this fair value gap. So these imbalances tell us what price is actually doing. Alright, that's it, not more, not less. These black candles are order blocks. This means that the people with deep pockets, they buy. Alright, so they buy. So right here on this day, this was 26th, so 29 December, alright, 2025. So right here, this date is 29 December 2025. So if we add these all numbers, 7, 8, 9, 10, 11, 12, 13, 14, this is 7. Alright, this is 9. This is 9. And if we add 1 plus 2, that is 3. If we add 9 plus 2, what is that? That is 11. That is 2. Alright. So anyways, let's leave this for a second. So this day, this kind of movement in silver, this is not a crypto to anticipate these kinds of movement. Like 17% in a day, it is not crypto, this is metal. World works based on metals. Alright, industries, people work, jobs and everything. We are not supposed to have change like 17% in a day. What? So this is the manipulation in itself. The large news agencies and people say that gold is going up, 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 up. They are building out of anticipation. They are actually building liquidity. Alright, for people who have already are long and they want to exit, what should they generate first for their profits? They should generate a lot of sell side liquidity. So the buy side liquidity. What is buy side liquidity? Buy side liquidity is people who are interested in buying the assets or commodity in an expensive price. Right? So people who have bought that asset cheap, they are going to exit after selling and having a lot of profits. Anyways, this day you can see we opened and then just boom up. So this is the high of that day, this is low of that day. Alright, so we have taken both high and the low in the same day. This candle itself tells us ton of things. It can be the reversal. It's saying, bro, we are going to see it down, lower prices. Alright, anyways, let's jump into the 4-hour time frame. We will discuss more there. So this is the day. Let's actually go to the daily time frame first. I want to draw vertical lines. So these vertical lines denote different days. is this Friday. Alright, so last week on Friday we saw a massive bullish growth. Alright, price closed near the high. So just the last month the change in price was from this low to this high, 18% movement to the upside in 1 week. Again, this is not crypto, guys. This is not crypto. Alright, you can see price was as I told you, the daily imbalance is getting respected to the upside. The 4-hour imbalances are also getting respect, like this imbalance, boom, up, this order block, boom, again this imbalance, this discount week, boom, this big imbalance, just retracement, shallow retracement, boom. Alright, so it's going up. So there's a limit, price goes up. So this is the Friday's close, this is the Sunday's open. So open and it went just up. You can see the 4-hour candles just weak is 6.34%. Alright, 6.34%. And then this candle violated the high of this candle, low of this candle. Potential reversal is coming, it's denoting that. So this is an imbalance right here, I can see that. Alright, down here is also an imbalance. We can say this. Alright, this imbalance was created, this retracement fueled and gave the price the energy to go up. So this is the final up. So what causes the final up moment? This imbalance. Alright, so we closed below this imbalance. I'm watching this, guys. So once we are closed below this imbalance, we're kind of bearish. We're kind of a bearish tone. We're kind of 4-hour is a higher time frame. Alright, well, daily when weekly are higher time frame, but 4-hour has also importance. So this up and this down, this is the market maker sell model, as we discussed, guys. Market maker sell model. Alright, let's go to the 1-hour time frame, 1H. Where is that? My eyes can see these relative equal lows at this moment, guys. Let's delete this imbalances first. These equal lows, so my eye targets these equal lows. So this is liquidity right here. Alright, so this is our weekly open, price went up and then boom down. This is our weekly open. You can see this retracement, we didn't even manage to touch the weekly open, so we are bearish. We are all the way bearish for now. I can see in this imbalance, right here is an imbalance too. Alright, so why I am choosing this imbalance over this a lot of imbalances? Well, this is a greater imbalance. Alright, but can we see another imbalance before this down movement was initiated? This imbalance with the upside. Alright, so this is up, this is down, this is a balanced price range. So that's why I'm using this. You can use this as well. Check how price is respecting these levels. Alright, so like previous example, This price leg, this is the discount. This price leg, this is premium. We can agree on that, right? We just use the bodies. You can see we are above the 50% level. So this is buy side delivery, intermediate term low, sell side delivery. Anyways, let's discuss this price action. When we just after seeing this price leg, we should ultimately wait and see if price can retrace to a premium. All right, let's say if we are here, so what can we what can we do at this point? All right, let's say price is right here. Well, we want to see a retracement first. Where your question is, this order block can be our retracement area. This high, right? This is the order block. You can see a small imbalance. This opening is crucial. This high is crucial as well because there is buy side liquidity. This imbalance, so the lowest price range is this. All right, if you take this one order block, so the mean threshold of this is right here, so you can use this. If price don't even come close to this, that is better for us. This shows weakness, heaviness. All right, so this is order blocks mean threshold. This is that fair value gaps low. Let's make it imbalance low. This is a high where the buy side liquidity is present. Let's make it buy side liquidity. This is our order block. All right, so we are what we are doing is we want to observe how price is behaving in these regions. All right, one thing is to be like, it's very simple. It's not very simple, but it's intuition. Like from this high to this low, this is a discount in itself. So if we want to sell something, it should be in premium, right? So it should be above this point. Let's eyeball, but you will not understand. Let's draw premium and discount. So we are willing to sell above this point, right? If we are willing to sell above this point, what is the best place to sell? That is where optimal trade entry comes. Let's make it the minimal optimal trade entry. All right, it's this point, 705, 61 level, I guess. Is it 61? It's 62 level, 705 and 79 levels. All right, so this is the best spot to sell. You can see price gave us the opportunity right here. Anyways, if there is a breaker, this you can see this is a mitigation block example. But if there is a this is a false swing. No, it's not false swing. It's known as a it is mitigation block is also known as the what is it called, guys? Oh, I forgot. So the breaker is this, mitigation is this, is anyways, I forgot the name of this swing, guys. Anyways, so if there is a breaker, we ultimately not expect price to go give us the OTE, the smart money reversal, and accumulation phases, the first phase. All right, so it gave us the perfect OTE level right here. So let's jump to 30-minute time frame if we can spot something that is helpful for you guys. You can see this low and this low are very low. This up and this down is a market maker sell model in the smaller time frames. So ultimately our target, if you are trading right now, this is your target. Accumulation, this is initial consolidation, accumulation, reaccumulation, smart money reversal, distribution, low risk buy, distribution, and then right consequently the price movement. Let's go to the 15-minute. So this is the 15-minute time frame. So this is New York Open for this day. This is New York Open. All right. Where is 2 p.m.? Right here is 2 p.m. This is to, let's make it 3. Yeah, so you can see the daily profile. It's delayed protection, London delayed protection, boom up, New York continuation, and then this is London close reversal. You can say this is New York lunch, both are same, London close, right? You can see the Asian range is not a quite tight range, so that's why we already expect the delayed protection daily profile. You can see 2 a.m. Why I cannot copy this? So this is the 2 a.m. European Open, so we expect protection after 2 a.m. Price opened, boom, down below the New York Open, rallied, New York continuation, and so price actually made the high not in London close, guys, but actually in 1 a.m. It's PM session. All right, so you can see the daily profiles in the market maker sell model. So anyways, let's delete the timing elements for now. Let's discuss just price action now. Market maker is this, guys. Market maker is this. This is market maker sell model. All right, so let's bring the arrows, the path here. We will discuss now what market maker is. So market maker sell, this is our initial consolidation, and then this is accumulation. Alright, so this is the market maker sell model. Consolidation, it builds up the sell side liquidity, price goes up where people buy, so their counterparty sell is smart money. It boom, the market goes down. So the smart money have sold here, so they want their sell orders to be paired with the sell liquidity here, right here. So they exit. So if they are selling right here, they will be exiting with the buy order. So the buy order pairs up with the sell side liquidity. This is a market maker sell model. So if we just talk about this right here, all right, just the smart money reversal, we can see this price action, like this price action, right? Let me copy this to this side. Let's now talk about this right here. All right, it's just the retracement to this price, like retracement to the premium, this breaker, and then goes down. So you will be amazed if I tell you this up to this down, it's actually this whole thing just small, like this. It's like this. All right, abu hotai bare bhai chagati bare. So let's discuss the price now. So this is the larger market maker sell model. All right, this is a smaller market maker sell model, smaller market maker sell model, smaller market maker sell model. So what we are targeting is, let's remove these lines because these lines are denoting the premium areas. So price is using this fair value gap imbalance. This is imbalance, you can see imbalance low. So it used the fair value gap and it went down. So there are two kinds of things, that is first is offset distribution and another is what is offset accumulation, and then it's reaccumulation. All right, so this is offset distribution, this is redistribution. All right, because we are just entering this fair value gap. Anyway, let's go to a 5-minute time frame. I want to show you the real market structure pattern now. This is the real market structure pattern, guys. First you should have the context, guys. If you don't have the context, you can't spot the market structure pattern. It's everywhere. You will be amazed to see it's everywhere, but it doesn't work. All right, we know the narrative, what price is going to do and what it has done. We are looking these lows, price rallied in the Asian session, in the London session, in the New York session. It was going up, 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 up. Since we already know the opening of that imbalance, I haven't plotted the levels. I'm sure it touched the lower quadrants. Let's do that now. All right. This is an imbalance. This is also imbalance. Alright, let's just use this imbalance for the sake of simplicity. You guys will say we don't know if we are going to see this imbalance or if we are going to use which. Let's just use this. Right, let's go to the time frame. You can see the market maker, another market maker right here, as I was telling you. Anyways, let's discuss the bigger market maker model first. This in first. Alright. Well, if we want to be precise, let's just use it, guys. It will be precise. Alright, you will see how price reacts. Abu jaga chibar with me. Bunu yapmayacağız abi. De kata tuma. Yarın etsin bile. Hello. So guys, you can see the balanced price range. I have plotted the labels right here. Upper quadrant. This is upper quadrant. This is the highest quadrant. The upside. We have one, two, three, four quadrants. Alright, so we have 5 lines, 4 quadrants. So price first touched the balanced price range of ours is rejected, leaving this imbalance. Alright, but we haven't seen a good displacement with intermediate term lows being disrespected and balanced price ranges appeared. So we don't have that right here. So we do not want to sell right here. We have the underlying narrative, everything biased to sell, but we are not selling right here. Alright, we wait. So we have made this high. This is known as engineered buy side liquidity. Alright, so this is the buy side liquidity. So price boom, you can see the energy right here, boom. And how price is behaving at the quadrant level, this rejection, and then boom, this imbalance, and then you can see the price respecting the mean threshold, or you can see the consequent encroachment. Price went up to the upper quadrant, stopped dead right there, and then rejected. Alright, so this down movement, if you are algorithmic and you know the algorithm, you can just sell off of this order block, but we are not. Alright, so we wait. I can spot a buy side liquid imbalance right here. Alright, and this intermediate term low, this is intermediate term low, intermediate term low. Alright, so this is buy side delivery with imbalance, intermediate term low, and then price boom down. Alright, can you see this imbalance, guys? This is also imbalance, but I want to tell you the difference between these two imbalances. This is a buy side this is a sell side imbalance, buy side inefficiency. This right one is a sell side imbalance, buy side inefficiency. So it should support price if it's ever retraces to the downside, right? But ultimately it went down and then have the rejection. You can see once the price was below the consequent encroachment of the 1 hour fair value gap, it stopped dead right here. Right, and then it went down, boom. So this imbalance became inverse fair value gap, so I draw color that as red. Alright, so this is the sell side buy side imbalance, this is the sell side imbalance. So this is the real market structure shift, guys. This is the real market structure shift. Alright, so let's delete that. So we know the market structure shift right here. So our entry is this order block right here, and you can enter this order block, but this is like demanding very good A plus 100 plus setup. Yeah, alright. So if you have all these requirements like entry, market structure, and this order block, then you could have maybe 80% of the win rate and maybe 1 to 10 RR risk to reward ratio if you just entering the smart money reversal of the market maker models of the higher time frame. But we should not do that. Well, personally, when I see this imbalance being created to the downside after the whole shenanigans, I just use the low of the fair value gap to enter short. Alright, like this. A stop loss above this high. Personally, I use above this high and target this. So the smaller market maker model is this, guys. Smaller market maker model is this. You can use like this 1 to 7 to 1 ratio. Alright, price went down and then it goes up and then down. This is a smaller market maker model. Right here you can see accumulation, reaccumulation, smart one reversal, distribution, ultimately boom. Alright, this right here, this is breaker, high, low, higher high, lower low. So this whole candle is breaker, guys. Why this is breaker? Because this breaker led to the buy side liquidity run and then price ultimately closed below this range. That is why this breaker. And you can see once we close below this low itself, price touched the mean threshold of this breaker. Again it touched right here to the pip. This is known as algorithmic price delivery and price trading. Alright, so you could have used this market maker model, and then if we go down, this is a market maker model. You can target these lows again right here. Alright, buy side delivery, intermediate term low, sell side delivery. Alright, this is what I'm talking about. Price will not give you the ultimate entries. This was our order block. Alright, this is our inverse fair value gap. So price gave you the opportunity to enter off of the inverse fair value gap. Why price is not giving you good entries, or like why it's not going up there? Because of this black candle. Alright, so I cannot give you everything in just one video. It will be overkill. Alright. So if you target the bigger market maker model using the smaller market maker model entries, 1 to 20 RR, how much time? 10 R, you can see 10 R. So this is the 1 hour time frame right here. You can see the smaller market maker models are just up candle, down candle on 1 hour time frame, but on this smaller time frame you can see the bigger market maker models. Like as I told you, this is the market maker sell model, right? This is the I guess it was drawn on the 15-minute time frame. Yes. So this market maker model is the bigger model. This just up and down is this part, up and down. This up and down is the whole market maker model. So the higher time frame retracement and price it's called repricing. Yeah, it's retracement and repricing to the upside is a smaller time frame market maker model. There's a lot of nuances, but in this video I can just tell you this. We've covered a lot, guys. Ton of new things. So if we want to see lower prices, what can we anticipate? We can anticipate this. This is our order block. All right. So let me tell you another thing. All right. Let's start with 3-minute time frame. So on the 3-minute time frame, this run up and this run down is the market maker model, right? This part where I explained in detail is known as the smart money reversal. Okay, alright, let's make it 40. Smart money reversal 3-minute time frame. Let's jump to 15-minute time frame. 15-minute time frame, this is a market maker sell model. Similarly on 1 hour, where is my drawing? The SMR drawing. Right here. So the SMR itself was our smaller time frame market maker model, right? You can see the 1 hour market maker model is this run up, this run down. These 1 to 3 candles, 1 to 3 candles to downside. This was our 3-minute market maker model. But on the 1 hour time frame, these 3 candles were just the smart man reversal of the 1 hour market maker model. If we go to the 4 hour was 1 2 3 4 5 6 candles up, 1 2 3 candles down, market maker model. And this just one candle was a smart man reversal. What about daily? This daily, it was up candle, down candle. That is what I explained. A market maker model on the lower time frame is just the retracement and repricing on the higher time frame. It was the retracement and reprice to the downside. Alright, so let's remove each and everything. Well, let's not do that. Let's open another chart. Not this chart. One that could be better. Yeah. This is our potential order block, guys. Well, we can use this. This is our main order block. This is our main order block. So we want to see price close below this. Alright, and eventually in the coming days, I would like the price to close below this imbalance, because this will be our buy side delivery with the imbalance, and then intermediate term low, and then sell side delivery, making this bigger market makers, bigger market structure shift pattern. After that, we can just ride this downwards movement. Where? Here somewhere. Right, so this here, I think. Anyways, let's pause this screen recording for now.